All right, just before 9, we get to you all the market action this morning. Let's count down to the headlines and then take a look at how we're kicking off trade for the day. Here's what's moving in the corporate and financial world this morning. The Competition Commission of India finally starts probe into Indigo's alleged abuse of market dominance. Reports say the regulator has sought details from the airline in connection with its probe, which is expected to look into exploitative conduct by the airline during its recent flight disruptions. Growth in India's 8 core infrastructure sectors sharply down from last year at just 1.8% in November, but higher than 0.1% in October. An RBI report, meanwhile, says the government's continued focus on macro fundamentals and economic reforms is the key to keeping the economy growing strongly in the face of global challenges. Adani Group begins consolidating its cement business. Ambuja Cements approves the merger of ACC and Orient Cement with itself. ACC shareholders to get 328 shares for every 100 held. Orient Cement shareholders to get 33 shares for every 100 held. Adani Group says the move will unlock economies of scale and create a pan-India cement powerhouse. In a big move, weight loss drugs in pill form get regulatory approval. The US Food and Drug Administration green lights Novo Nordisk semaglutide pill for weight loss. The 25 mg drug has the same active ingredient as Wegovy and Ozempic. Novo stock jumps 8% on the FDA approval. US markets extend gains. Nvidia, Micron and Oracle boost S&P 500 and Nasdaq. Gold and silver soar to new highs as safe haven assets. Positive start expected for Indian markets with the GIFT Nifty up. Let's take a closer look at those gold and silver prices soaring to new highs. There's absolutely been no stopping the precious metal. And in fact, the MCX gold hitting a new high record there, opening at 1.38 lakhs, surging about 1,500 there. Let's take a look. There you have it on your screen. And we've also had MCX silver surging 3,000 rupees, trading at 2.16 lakh rupees. That's a record high coming in. And it's really just been from strength to strength. And while silver, of course, has been far outpacing even gold, gold this morning catching up and also trading or hitting those record highs. We've got Shailendra Bhatnagar joining us. We've also got Kunal Shah, Head of Commodity Research at Nirmal Bank. Let me go across to Kunal on those gold prices first. Kunal, take us through exactly what's happening. We're heading into the end of the year. Would you call this safe haven or would you call this perhaps some other kind of structural demand? What's causing the build-up on the precious metals?
I believe that what we are seeing is a fear of complete monetary reset. The way the Western world's debt and especially what is recently the recent upside in gold is basically on account of what we saw in happening in Japan. Even after the interest rate hike, we've seen bond yields shooting up and making fresh highs. This generally doesn't happen. So market is not ready to accept that inflation is going to go down. Okay, so my sense is that this is more to do with what is happening in the global bond market. That is indicating that the inflation is going to shoot up in times to come, especially in the western part of the world, and investors are having no choice but to hedge themselves. They are seen buying gold. So this is not driven by the jewelry demand. This is not driven by central bank buying lately. This is purely investors rushing to hedge their risk, which can arise from the unstable bond markets in Japan, in the US. And that's why they are seen buying gold. So 4550, 4600 looks very likely. And for gold and silver, $72 to $75. So from here, you should taper down your return expectation, but the trend definitely seems to be pretty strong.
Okay, so taper down return expectation. I was just going to ask you on the price action there. So just to recap, from an investor point of view who's looking at this run up, too late to get in at this point?
I would say for investor, if you are still expecting 15%, 20% return from here, then I don't mind. And you can, whenever you see after this kind of run up, without any reason, if there is any profit taking, you can add a bit more there. So I would say still, you can remain invested in gold. There is nothing fundamentally bearish. There is nothing going to be bearish for gold, at least in shorter term. We are not going to see any major bearish reasons.
All right. Great. Thanks so much for joining us with that, Kunal. Gold and silver prices soaring to those new highs, and as Kunal said, primarily to do with a lot of different macroeconomic factors and money market factors, not really on the back of investment demand. But if you're an investor in the precious metals, you're probably laughing all the way to the bank right now. Shell, good morning. Counting down to market opening. How's the setup looking?
Well, Aabha, there is a crisis of plenty. Firstly, good morning and a very warm welcome to everyone. Today being the last day of December's expiry, we have a very, very strong market. Last 3 days have added 574 points to the Nifty, and it is still looking better. Reliance, L&T, Bharti Airtel, amongst the Nifty stocks that are doing immensely well. And among indices, there has been a very strong breakout and a strong bullish crossover in NSE 100, the total market index, the micro cap 250, and of course the Nifty Next 50. So mid caps, micro caps, large caps, all are participating in this Santa rally. People have to get in. Over the last 4 days, FIIs have put in about 3,300 crore rupees, which is a major positive, Aabha. We are looking for good times ahead.
It does look good this morning. Let's take a look at this opening tick. So sadly, we're just flat on opening. We thought we would have been seeing a little bit more action. Overnight, we saw some positive moves on Wall Street with tech back in action. So let's pull up those IT stocks today and see how we're trending on that front. But on the index right now, it's just flat at this point of time, just a marginal green tick coming in across the Nifty Bank, across the mid-cap indices. Let's pull up some of those counters. Okay, IT is not in action, so we're clearly not following the global trend. Let's pull up some of those cement majors on the back of the merger news with regards to Ambuja, ACC. We've got that big merger news coming in, and I think if I take a look at some of those stocks, Orient is moving up, and we've also got, I think, Ambuja moving up. Let's pull it up for you. ACC is quiet, but pull up an Ambuja, pull up an Orient, and we've got a lot of action on those cement majors this morning, and we'll take that through with our guest also in just a moment. So Ambuja Cement also up about 3% today. So for those of you invested in any of those cement companies, big merger, and that of course will lead to that of course will lead to some amount of restructuring in terms of your shares and investments within those companies. So Shell, let's just talk about that for a moment. ACC, Ambuja, Orient, it's a pretty big consolidation call that's coming in from Adani when it comes to cement majors.
Absolutely, Aabha. And just yesterday I was speaking to a very large institutional player, and he mentioned cement as being one of the sectors where he would pour in fresh money from his clients. But keep an eye out on Ramco Cement, keep an eye out on India Cement, as also Ambuja and ACC. Of course, those are news driven, but India Cement is top of the pops as far as cement is concerned. December, the monsoon was extended, therefore the quarterly numbers would be lower, but that would be an opportunity for long-term players to get into stocks like Ultracet, Ultratech Cement, and of course Ramco Cement. Keep an eye out on India Cements, already at a record high.
Okay, so cement is definitely in action today. Let's pull up some of the other newsmakers as well and see what else is reacting this morning. Remember, we've got the New Zealand FTA in progress, so a little bit of action might be there on some of those agri names. Let's pull that up for you and see if there's any reaction on that front. We're also tracking metals, obviously, on the back of gold, silver, and the kind of traction we're seeing there. IT not reactive this morning. And to some extent, of course, we'll also be tracking jewelry on the back of those gold prices. So let's pull that up for you as well and take a look in terms of whether or not we're seeing any of the jewelry counters or even the financiers, gold financiers reacting this morning. Meanwhile, On the back of some brokerage views, Morgan Stanley on Ambuja Cement is overweight, target price of 650. And they're keeping in mind, of course, the entire merger as well. And they do see operational efficiencies unlocked on that front. HSBC on power saying that they are expecting some amount of a rebound in early December. And Morgan Stanley on Pine Labs has an equal weight, while Nomura has a buy on Samvardhana with a target of 125. So Nomura on Samvardhana, let's pull that up for you, target price of 125, and Morgan Stanley on Pine Labs, the target price there is 260. That's an equal weight coming in on Pine Labs this morning. No major reaction on either of those at this point of time. Shriram Finance, of course, has been the other major stock in news. Remember, it's got brokerage calls coming in across the board, lots of buy calls. Now, of course, we've also learned that the company may cut interest rates by as much as 100 basis points over the next couple of years, flush with about $4.4 billion from Japan's MUFG. The Non-Banking Finance Committee sees lower rates being driven by a stronger balance sheet, lower leverage, and a possible credit rating upgrade. The company has meanwhile clarified it's not looking for a banking license. Listen in.
What are you going to do with the money is the big question, sir. Are you going to go for expansion plans or opening up more physical stores or and looking to acquire more brands? What is the pipeline, sir?
We would prefer to grow organically. We will definitely add more branches. We have a rural centers around 600. We may add another 150 branches every year now onwards. So that will give some kind of a bigger reach for us. Not only that, we also feel that there is enough scope and opportunity to grow in our existing business. And both together, we should be able to manage it much better.
A lot of conversations happening around the banking license. Are you looking at it?
We are not definitely looking at it. Neither their partner or we never discussed on becoming a bank.
And GST cut has definitely given a boost to the economy. Your green portfolio is also one of the examples for that. I want to ask you, how's the lending in that space? And of course, how's the auto sector doing with respect to your department for logistics? Any GST cut benefits have you foreseen, sir? What is the growth margin you're seeing?
The GST cut has really helped sentiment of the people. There is higher growth in the sales, especially in October, November. We saw quite a big jump in the sale for all category of vehicles, and similarly with the electric vehicle. So in green financing, we do have an ambitious plan. Right now, we are doing around 100 crores per month. It should double in the next year. So we believe that growth will be much faster in green phase.
All right, let's take a look at some more newsmakers. We've got Puravankara that's buzzing. Let's pull that one up for you. They have acquired a 53-acre land parcel in Bengaluru with a GDV of about 4,800 crores. The stock is spiking up about 4% there, 5.5% now actually. Looking good this morning. Shell real estate has just been on fire. Puravankara today, of course, seeing a phenomenal move. Earnings have been solid. We're now heading in, of course, for a fresh quarterly reporting of earnings, but it has seemed to be all systems go when it comes to the real estate counters. Prestige Estate, in fact, has also acquired a 25-acre land parcel in Chennai with a revenue potential of 5,000 crores. I don't know if that one's reacting this morning, but this is the kind of news and development buzz that we've been seeing across some of the key real estate counters.
Yes, Aabha, but these are, all flashes in the pan which are news driven. If viewers or traders are looking for sense and sensibility, then the PSU pack, including railways, including defense, and including public sector banks, is offering a very, very strong opportunity. Railways and defense ahead of the 1st February budget. Therefore, the run-up has already started. Remember, these were beaten down stocks. And of course, PSU banks led by Canara Bank, Bank of Baroda, SBI, and of course, Indian Bank. These are stocks to look forward to and buy the dip. Of course, consult your own technical and financial advisor. Aabha.
Okay. Let me also bring up for you Bellrise Industries. We've had about close to 900 crores change hands in a pre-open block window. So Bellrise, that's the move you're seeing on that counter. Let's pull that up for you very quickly. There you have it. That's why that stock's moving like that. We've also got a whole bunch of NBFCs that are moving right now. Let's pull those up for you as well. And, we talked about Shriram Finance already. But we're seeing that buzz pretty much across the board. And I want to bring up gold financiers, Muthoot, Manappuram, just to see whether they're buzzing, because that would primarily be on gold, of course. Chola investment is up about 6% right now as well. So giving you a sense of the action coming in there. But are valuations looking kind of stretched now, or do we intend to continue to see record moves when it comes to some of these NBFCs?
Well, Aabha, I think the consensus trade since 1st of April, when we had the rate cut by the Reserve Bank of India and a massive one, 0.5 percentage points, that was when the rally started in most NBFCs, including Bajaj Finance, Cholamandalam Finance, and of course the current market favorite Shriram Finance. And then there were a series of stake purchases, especially in Shriram Finance, and large block deals that happened in L&T Finance and AB Capital. So this is a consensus trade. It is ongoing, and let's see when the party stops. But for Shriram Finance, remember, this is already a 5:1 split. So what you see as 940 is roughly 4,600 on the price, and still there is no stopping it, because MUFG now enters, and Japanese players have deep pockets with very low cost of money, and that is what is changing the dynamics of Shriram Finance. Aabha.
Okay, that's on Shriram Finance. Let's take a look at Investec. They've initiated a coverage on Canara HSBC Life Insurance with a buy, and they put a target of 225, calling it a mispriced opportunity. Let's pull that one up for you. Canara HSBC Life, and it's up 5% today. They've said it's a relatively low-risk way to play India's structural life insurance growth, and the stock is just spiking. You know, we had some of these insurance counters in news a little while ago, but this spike is coming in about a week, 10 days later. Is this purely on the brokerage view? Investec initiating that coverage, 225, it's at 139 right now, Shell. Is that what's driving the stock?
Aabha, there is another major drive that is behind Canara HSBC and Canara Robeco. Remember the PSU banking merger plan by the government of India? Well, Canara Bank is going to emerge as one of the surviving banks. That is what analysts are telling me, at least. And that essentially means that Canara Robeco AMC and Canara HSBC Life will get a wider branch network to sell their products. Remember, they were priced very well in the market, and the 100% FDI in the insurance bill recently passed by the parliament is adding a lot of flavor not only to Canara HSBC Life, look at SBI Life. So these are the major drivers, the tailwinds that are behind the insurance sector, Aabha, especially the PSU insurance sector.
All right. That's an interesting move coming in there on these counters this morning. Let's recap for you, of course, some of the major news. So far, we've got metals in focus once again. We've got gold and silver at record highs. We've got some of these key life insurance names moving as well. Hindustan Copper from the metals pie again, 1.5% up. So constant move coming in there. The cement merger, so clearly Ambuja, ACC, Orient in focus there as well. That's the big news on that front. And of course, a whole host of names from the broader markets as well. Keep an eye on some of these themes as they develop through the day. We'll be back with you at 3 o'clock to take you through market closing. Thanks for watching. From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news, we've got your morning game plan covered. Watch me, Aabha Bakaya, as I bring you the opening bell action Monday to Fridays, 9:05 a.m. only on India Today.
Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. Mangalwar hai to Mangal hi hoga, and that's visible across the board. The Nifty and the Bank Nifty pausing a bit after a 3-day rally, but a bit of profit booking in IT only to be expected, nothing to be worried about. But across the board, you see a lot of moves coming in which are for the better as far as markets are concerned. Strong charts on the Nifty 100 index. The total market index showing a bullish crossover, micro cap 250 index also in strength, and of course the Nifty next 50. Metals, commodities, the manufacturing space, chemicals, energy, and of course the rural space as far as individual sectors are concerned are all showing signs of bullish crossovers. So a broader market which is gathering strength. FIIs have poured in somewhere like 3,300 crores in the last 4 trading sessions. That's a very big positive. And of course, the Santa rally on its way, the budget run-up being seen in railway stocks on a select basis, as also defense counters. That's the broader theme that we are tracking in the last 1 week of 2025. That has been very, very painful, but as good a time as any to speak to Arpit Beriwal, analyst for derivatives and wealth management at Motilal Oswal Financial Services. Namaste Arpit, a very warm welcome. A view on the Nifty?
Very good morning. So if we see overall Nifty in last few days, we've seen good recovery from 25,900 to almost 26,200 levels. So last 3 days has been definitely better. And looking at the setup wise in the weekly time frame, Nifty and negative the formation of lower highs after 3 weeks. That indicates that downside multiple supports are intact, but at the same time 25,250, 25,325 is the major supply zone where the index is not able to surpass that. Looking at the overall option data also, as today being the weekly expiry, 26,100, 26,000 put writing is intact, which is likely to act as a major support on intraday basis. At the same time, upside 25 to 26,250 will be the major hurdle. So overall, a sense is that bias will be positive till Nifty closes about 26,050 levels. So overall, a buy and dip stance, but at the same time, intraday volatility is very low, as you have seen in the yesterday's session also. It's barely within our trading point of 100 points. So volatility is relatively low, but the good part is that multiple supports are intact. Looking at, along with that, India VIX is also trading around 10 levels. That clearly comforts with increase in PCR ratio. That definitely comforts the bulls at the lower levels. So overall stands positive with major support around 2650 for upside move towards 26,200, 250 levels for the expiry day point of.
Okay, ladies and gentlemen, the first 15 minutes have lapsed in the market, and we are looking at a mild bite of profit booking as far as the Nifty is concerned. Remember, in the last 3 trading sessions, the Nifty has gained 540 points from a low of 25,725 to a high of 26,180 in a span of 3 trading sessions, and that's a bit of profit booking that's coming in. Let's see how the first 1 hour moves up, but strong charts in RIL, HPCL, BPCL, L&T in particular. These are looking really good on the Nifty, including Bharti Airtel, the entire cement pack, which is in good shape, and of course the pre-budget run-up happening in railway, as also the defense counters. So broader markets are looking good. Let's see how it goes. We are waiting for Aabha to come in. 2 picks from your side, Arpit, as far as charts are concerned.
If you see, we have seen good recovery in the broader market in the last couple of days. So first will be from the energy space, OMCs, that is HPCL. So if you look at the chart structure of HPCL, definitely a very strong setup on the monthly scale. Retest of breakout around 440 levels. On the weekly scale, it is forming higher highs, higher lows from last 2 weeks. Definitely a base formation near around 465, 470. So the stock can head towards eventually 500, 510 plus levels. Along with the second would be from the cap goods, that would be L&T. So the stock is though consolidated from last couple of sessions. corrections, but the bigger trend is positive and good base formation here on the daily and the weekly setup. Daily scale is consolidating, but closing above 4100 can definitely propel the stock towards 4200, 4300 positionally. So L&D and HPCL would be a preferred picks for the coming week going forward.
Okay. Aabha joins us. Over to you, Aabha. A mild bit of profit booking on the Nifty and the Bank Nifty, and the IT index slipping down 1.3%. Over to you.
It just looked like such a strong start, Shell. Everything was kind of in focus, but we're not really seeing a rally today. However, we're still above 26,100. So, I mean, no harm done, so to speak. But, there have been a lot of reports coming out about how perhaps markets will have to get used to a new mix of factors. What do you make of some of this commentary? Because is this really what we're in for, or are we still looking forward to perhaps some amount of momentum picking up with earnings and some clarity on the trade deal, perhaps in Jan, February? I don't know if this trade deal is going to happen, by the way. Shell.
That's for Arpit or me?
For you, Shell.
Okay. Aabha, let's just keep the trade deal aside. That's the least of the market's worries. All we are looking forward to is a rise in valuations, a rise in earnings, which the third quarter will start in the first week of January. Keep an eye out on those earnings, and of course fresh allocations coming in from foreign institutional investors once they come out of their Christmas fever. So first week of Jan is the critical point for the market, and I'm hoping that the close for December 31st for calendar 2025 will be above 26,200. Let's see whether that happens or not. But a truncated week this time. Thursday is a holiday, Christmas around us. But good strength over the last three sessions, and the broader markets are looking good. That's what I hope for. Also a pre-budget run-up. So my table is full with goodies. Let's hope foreign funds come in and start buying. Aabha.
That's just what we're all hoping for, pretty much. Arpit, let's get your view as well. We've been hearing calls of, I think, 28,000, which seem very doable, and then 30,000 from foreign brokerages on the Nifty for next year. Currently, we're just stuck at 26,100 pretty much. Let me just get some targets for you. What are you looking forward to, let's say, in the first half of next year?
If you see overall, if you just go by a little bit of the history in last 1.5 years, India has gone into a time correction phase from September 24 till 26,200 that we had made. We've seen a correction of 15%, and then we are back to that levels of 26,200. So definitely index is no mood to go down on our positional from a long-term perspective. However, having said that, we have seen overall a major base formation is seen around 25,500 levels, and our sense is that on the monthly setup till it holds above this level, definitely the index can see upside move towards 26,500 and then eventually 27,000 levels. As in last couple of months also, index is outperforming whereas the broader market is underperforming. So looking at the tone on the multi time frame analysis also, definitely the targets will be for 26,500 immediate basis and then positioning 27,000 plus level for the next couple of months time frame.
All right, that's go ahead, Shell.
Okay, 9:36, Aabha. Let's just look at the broader markets at this point of time. While we see a bit of profit booking on the Nifty, Bank Nifty, as also the IT index. However, the broader market is showing up in strength. 1,400 shares in the green, 1,200 in the red. So that's even Stevens for you. When you look at the broader market, about 13 indices out of 19 are in the red. The gains are led by the energy index. Therefore, look at HPCL, look at BPCL, look at RIL. The Nifty next 50, as I was pointing out before the markets opened, have shown a bullish crossover. So look at stocks there. And financial services, Aabha, you've marked Shriram Finance. From my side, look at the housing finance companies, Canfin Homes, PNB Housing Finance. Those are looking good. And PSU banking sector. Look at Canara Bank, look at Bank of Baroda, SBI. Very, very strong buys happening there. as also Indian Bank, Aabha.
Okay, great. Let's take a look at some of those banking names with Arpit as well. Arpit, what do you think? Where should perhaps investors focus their attention? PSBs have been off and on, but would you still be looking at them actively?
If we see over the financial space, if we just bracket into a couple of sectors, NBFCs, private banks, PSU banks. So relatively, PSU bank has seen a good share of rally in last couple of months. But now if you look at the sector wise from the mid cap private banks particularly, so if you look at the chart setup of Federal Bank, so from here on Federal Bank, though the stock has rallied, but the setup wise on the monthly and the weekly setup, the stock still holds good value. From here on also, the stock can head towards 280, 285 positionally. If from the PSU banks, if you talk about the space, Indian Bank has seen a big dent, but within the PSU Bank large cap, we'd like to stick with SBI because this counter hasn't fallen much in last couple of days time frame as PSU banks have seen corrective ways, and SBI would be a preferred pick. Then the stock can head towards 1050 plus positionally from a 2 to 3 months perspective. So SBI would be a preferred pick within the PSU bank space. Within the mid cap space, Federal Bank would be a preferred pick that can one can go long with a target of 300 positionally from here.
Aabha, I'd just like to add a word on Federal Bank. Along with Federal Bank, one of the most underreported stocks is City Union Bank. These two stocks actually are showing signs of life not only on charts. Federal, of course, is at a record high. Ditto for City Union Bank, but lots of mutual funds from the mid cap and the small cap space have added quantities of City Union Bank and Federal Bank in the past 40-45 days or so. Remember, Federal also has a very large gold financing book, and that has something that has grown rapidly down south over the last 7-8 quarters or so. So if you're looking out for quality within the old private sector banking setup, these two are on the mark, but as usual, please also consult a financial advisor before you get into it. Aabha.
Okay, Arpit, from the NBFCs in particular as well, which ones are looking most attractive to you?
NBFC has been a very favorite sector from last couple of months, and if we see the strength has been enormous, and within that our preferred pick would be Shriram Finance. From last almost couple of weeks we have been quite bullish on this counter as it gave a monthly range breakout about 850 levels, and slowly steadily the stock is heading towards new life activities. Yesterday also I've seen a good uptick from 900 to 945 levels, and going forward I sense that the stock can head towards 1100 positionally with a 3 to 4 months perspective. On the immediate basis, 1000 level is the target that we have seen that the stock can achieve. So the Shriram Finance would be a preferred way within this space going forward for the next couple of time frame, with major support around 890 for an upside move towards 1000 and then positionally 1100 plus levels.
$941, ladies and gentlemen. We'll just take a very quick detour into prices that are buzzing in terms of volumes. Aabha, yesterday we talked about the wagon makers, strength coming back into Jupiter wagons again after yesterday's stunning rise, now up 5.4%. Cholafin, this is something that you've been marking for a while, 6% higher today, 1680. Hind Copper moving on the back of a metal rally, no stopping Hindustan Zinc, 1.7% higher. Remember, they are the largest producers of silver, and we've been marking silver for a long while. And Aabha, a change in a digit in MCX may happen. You'll just see 11,000 coming into MCX for two reasons. One, silver is about 28% of its traded turnover on the index, and more importantly, the stock is headed for a stock split on Jan 2nd or 3rd or the first week. So a very sharp run up happening on there in terms of record highs. National Aluminium, M&M Finance, City Union Bank, Eicher Motors, Maruti and Laurus Labs. Aabha.
Okay, I'm just looking at some of the other stocks that have been on a move this week or recently. From the new age counters, I mean, we've seen that action spiking on a Grow, for instance. Misho, of course, was very volatile, but Grow has seen some positive commentary coming in as well, and that's, of course, been in action. We've got 197 in news today. They're incorporating 2 wholly owned subsidiaries and also bringing an investor for its UAE arm. So that's some of the news building up there. Lenskart approved the acquisition as well. The recently listed company, their subsidiary in Singapore, has approved the acquisition of 2.5 lakh ordinary shares, representing 50% of the total issue share capital of Marco Optical in Thailand and Sunrise Thailand as well. So that will become a JV between Lenskart Singapore and Matte Optical. The counter, however, is down about 2.5% today. So some merger news on a Lenskart this morning. Grove was, of course, on fire yesterday. 197 also quiet on the back of any of its news coming in today. But from the New Age listings, and they're different stories altogether, but any of these that you're tracking, Arpit?
If you see, definitely the stocks are in limelight from last couple of days time frame. So if you look at the particular chart of Lenskart, we have seen a very sharp up move in last couple of days from 410 to 520 to 500 levels. And yesterday the stock has corrected from high levels. Along with that, in a similar way, if you see the chart structure of Misho, that is just a newly listed company, from 180 we have seen a move towards 250, and the stock is down again 15-20%. So generally such counters have higher volatility phase when the stock is listed. But look at the setup wise, definitely I think from all the counters that we mentioned over here, Lenskart, Misho or Grow, relatively Misho looks better on the chart, where the immediate support is around 165, 170 levels, where the stock started rallying from on 16th of December. So going forward, our sense is that 165, 170 will be major support levels. Having said that, higher volatility definitely creates the bigger stop losses. So you have to keep that thing in mind. 170, 175 will be a major support zone for this counter. Upside 215, 220 will be the level to watch out for. Apart from that, Lenskart and Grow for the timing we can avoid because there's huge volatility, and can focus on Misho for the time being.
All right, I'm not sure if Shell can hear you there. Let's also take a look at, we've got cement, of course, in focus. Ramco, incidentally, they've sold some non-core assets worth about 500 crores to Prestige Estates. Let's pull up Ramco for you. But otherwise in cement, we're tracking that big merger news. That's really the buzz, and just down about 1%. So let's pull up again Ambuja. Remember, they're going to issue 328 shares for every 100 shares held in ACC as part of the merger swap. So we've got Ambuja up today, ACC is quiet, and we've got Orient Cement also seeing a bit of a spike on the entire consolidation. That's playing out there. Morgan Stanley on Ambuja giving it a target price of 650, being incredibly overweight there, saying that the share swap ratios are neutral for ACC minority shareholders, positive for Orient minority shareholders, and that's why you're seeing that spike coming in today, and that this will unlock at least 100 rupees per ton in cost improvements. So they're looking very positively and favorably at this news coming in. All right, I think we'll leave it there for now. Arpit, thanks so much for joining us. We'll be back with you shortly to take you through other moves in the markets.